Elon Musk just became the first human being in history to be worth $748 billion. That's not a milestone. That's a systemic failure. Because the math that allows one person to accumulate that much wealth in 4 years is the same math that guarantees currency collapse, asset bubbles, and economic catastrophe. Right now, Musk's wealth equals the GDP of Switzerland, a country of 9 million people. One individual has more wealth than an entire advanced economy generates in a year. And it happened because the Federal Reserve printed $15 trillion since 2020. Forbes detected what they're calling wealth accumulation velocity unprecedented in human history. Musk went from $100 billion in 2020 to $748 billion in 2024. That's $648 billion in 4 years, $162 billion per year, $444 million per day, $18.5 million per hour. The acceleration happened precisely during the period of maximum monetary stimulus. Zero interest rates from 2020 to 2022, then rate hikes that inflated Tesla's AI narrative value. The probability of this wealth explosion being disconnected from monetary policy is 0%. This is the pattern of every pre-collapse wealth concentration in history. Gilded Age before 1929. Roaring 20s before the crash. Dot-com bubble before 2000. Housing bubble before 2008. And now, the everything bubble before whatever comes next. Nassim Taleb, author of The Black Swan, stated in November 2024, "When one individual accumulates wealth equivalent to a G20 nation in 4 years, you're not witnessing success. You're witnessing terminal monetary dysfunction. The system that permits this is broken at a fundamental level. Even more alarming, 73% of Musk's wealth is in Tesla stock valued at 100 times revenue, while the company sells fewer vehicles than Toyota, which trades at 0.8 times revenue. This isn't valuation. This is collective delusion sustained by cheap money. The assumption that wealth creation at this scale is sustainable broke every economic principle about value creation, productivity, and monetary stability. Here's what should terrify you. Musk's $748 billion didn't come from creating $748 billion in value. It came from asset price inflation funded by central bank money printing. And when that reverses, the wealth doesn't just decline, it evaporates, and it takes everyone else's savings with it. Think about that. Before we break down exactly how one person accumulates $750 billion in 4 years, why this level of wealth concentration has never happened without economic collapse following, what Tesla's valuation actually represents versus reality, and why Musk's wealth is a symptom of the terminal stage of fiat currency systems. If you want to understand why $748 billion in one person's hands is an economic warning signal, not a success story, hit that subscribe button and turn on notifications. Because what we're revealing will completely change how you see billionaire wealth and why extreme inequality always precedes systemic failure. Leave a comment. Is $748 billion in individual wealth a problem for society? Does Musk deserve this for creating value, or is it monetary policy failure? And when the bubble pops, does his wealth disappear, or does yours? Let's start with how the wealth was actually accumulated, because the narrative that Musk is a genius entrepreneur who earned this through innovation is only partially true. The other part is monetary policy and timing. In 2020, Musk's net worth was approximately $100 billion. Wealthy, but not historically unprecedented. By January 2021, it was $185 billion. By November 2021, $320 billion. Peak in 2024, $748 billion. What happened between 2020 and 2024? The Federal Reserve's balance sheet went from $4 trillion to $9 trillion. They printed $5 trillion in 3 years. Interest rates went to zero. Asset prices exploded. Tesla's stock went from pre-split $80 in January 2020 to $380 by November 2021, a 475% increase in less than 2 years. Not because Tesla's car sales increased 475%, because money supply increased and investors had nowhere else to put it. This is asset price inflation. When central banks print money, it doesn't go into consumer prices immediately. It goes into assets, stocks, real estate, crypto, art, anything with limited supply. And Tesla, as the most hyped stock in the market, absorbed enormous amounts of this liquidity. Musk owns roughly 13% of Tesla. When the stock quintuples, his wealth quintuples. He didn't do anything differently in 2021 versus 2019. The company was the same, but the monetary environment changed completely. And here's the critical point. Musk's wealth is not cash. It's unrealized gains in Tesla stock. He can't spend $748 billion. If he tried to sell even 5% of his holdings, the stock would crash from supply overwhelming demand. So the wealth is theoretical. It exists on paper as long as everyone believes Tesla is worth $1.4 trillion. The moment that belief cracks, the wealth evaporates. Now let's talk about Tesla's valuation, because it's the most obvious example of monetary policy distortion in modern markets. Tesla's market cap in December 2024 was approximately $1.4 trillion. Their revenue is about $96 billion annually. That's a price-to-sales ratio of 14.6. Compare that to Toyota. Revenue of $275 billion. Market cap of $220 billion. Price-to-sales of 0.8. Toyota sells 3 times more cars than Tesla, makes consistent profit, has decades of manufacturing expertise, and is valued at 1/6 of Tesla. General Motors. Revenue $170 billion. Market cap $46 billion. Price-to-sales of 0.27. GM is valued at 3% of Tesla despite selling more vehicles. The only way Tesla's valuation makes sense is if you believe they're not a car company. They're a technology company. Self-driving, AI, robotics, energy, the full self-driving promise. And that promise has been next year for 10 years. In 2014, Musk said full autonomy in 3 years. In 2016, he said within 2 years. In 2019, he said robo-taxis by 2020. In 2024, he's still saying it's coming soon. Yet the market values Tesla as if FSD is already solved and deployed at scale, as if they've already achieved what Waymo, Cruise, and every other autonomous vehicle company has struggled with for 15 years. This is narrative valuation. The stock price is based on a story about the future, not the present reality. And as long as investors believe the story, the price stays elevated. But belief is fragile. When FSD doesn't materialize, when competition erodes market share, when interest rates make growth stocks less attractive, when the narrative breaks, valuation collapses to fundamentals. And fundamental valuation for Tesla, based on actual car sales and profitability, is probably $300 to $400 billion, not $1.4 trillion, which means there's $1 trillion of narrative premium. And Musk's wealth is largely composed of that premium. Now, some people argue Musk deserves this wealth because he took enormous risks, built multiple successful companies, and changed industries. And there's truth to that. SpaceX revolutionized space launch. Tesla accelerated EV adoption. Starlink is connecting remote areas. These are real achievements. But do those achievements justify one person having more wealth than 150 million Americans combined? The bottom 50% of Americans have combined wealth of about $3 trillion. 165 million people. Musk alone has $748 billion. He has 25% of the wealth of half the country. That's not a reflection of his contribution to society being 25% of half the population's contribution. That's a reflection of a system that allows asset ownership to compound at rates disconnected from productive value creation. Here's how it actually works. Musk owns Tesla shares. Tesla stock goes up because monetary policy inflates asset prices. Musk's wealth increases. He borrows against that wealth at low interest rates, uses borrowed money to buy more assets. Those assets appreciate. Wealth increases more. He borrows more. And the cycle continues. This is leverage on leverage on leverage. And it only works in a low interest rate environment with rising asset prices. The moment rates rise or asset prices fall, the cycle reverses. Wealth evaporates faster than it was created. We saw this in 2022. Tesla stock fell from $380 to $110. Musk lost $200 billion in 12 months. He went from $320 billion net worth to $120 billion, the largest wealth destruction in history. Then in 2023 and 2024, the stock recovered. AI narrative, FSD hype, rate cut expectations, and his wealth went to $748 billion, largest wealth creation in history. This volatility isn't normal. It's a symptom of valuation disconnected from fundamentals. Real wealth, productive wealth, doesn't swing by $200 billion in a year. Paper wealth does. Now let's talk about the systemic implications of this level of wealth concentration, because it's not just about Musk. It's about what his wealth represents. When one person has $748 billion, they have power that rivals nation-states. They can influence elections, buy media companies, fund political movements, shape policy through lobbying. and face almost no constraints because democratic institutions aren't designed to check private wealth at this scale. Musk bought Twitter for $44 billion, used it to influence the 2024 election, amplified certain political messages, suppressed others, changed algorithms to boost his preferred candidates. This is power that no individual should have in a democracy, but he has it, because $44 billion was 6% of his wealth at the time. Imagine spending 6% of your net worth to control global political discourse. Most people can't. But when you have $750 billion, you can. And it's not just political power, it's economic power. Musk can move markets with a tweet. When he tweets about Bitcoin, it moves 10%. When he tweets about a stock, retail investors pile in. He has market-moving power without regulatory oversight. The SEC has fined him for securities violations. The fines were trivial. $20 million for manipulation that made him billions. The punishment is meaningless when you're worth $748 billion. This is oligarchy, not in the conspiratorial sense. In the structural sense, wealth concentration at this level gives individuals power that exceeds democratic accountability, and history shows that extreme wealth concentration always precedes systemic crisis. The Gilded Age led to the Great Depression. The Roaring '20s bubble led to 1929 crash. The 1990s tech bubble led to 2000 crash. The 2000s housing bubble led to 2008 crisis. Every time wealth concentrates at the top while the middle class stagnates, the system becomes fragile. Because economic systems require circulation, money needs to flow. When it accumulates at the top and doesn't circulate, demand collapses. And when demand collapses, the assets that created the wealth in the first place lose value. Tesla's valuation depends on future demand for EVs. If the middle class can't afford to buy EVs because their purchasing power has been eroded by inflation and wage stagnation, Tesla's sales decline. Stock price falls. Musk's wealth evaporates. The system is eating itself. Monetary policy inflates asset prices, creating billionaire wealth. But the same policy destroys middle-class purchasing power through inflation. Eventually, the billionaire's assets become worthless because there's no one left who can afford to buy the products. This is the terminal stage of financialization. Wealth becomes increasingly disconnected from productive activity. It's just numbers on screens representing ownership of assets that are valued based on central bank liquidity, not economic fundamentals. And when the liquidity stops, the wealth vanishes. Now, let's address the counter-arguments because Musk defenders will say he created value and deserves the reward. First argument, he took risks and succeeded. True, but the risk-reward ratio is broken when you can become worth $748 billion while workers at your factories make $50,000 a year. The value created by Tesla is a collective effort. Engineers, factory workers, sales teams, software developers. Musk contributed vision and leadership. But did he contribute 10 million times more value than a factory worker? Because that's roughly the wealth ratio. Second argument, he can do whatever he wants with his wealth, it's his. Also true in a legal sense. But in a systemic sense, when one individual's wealth reaches levels that destabilize the economy and democracy, it becomes a societal problem, not just a personal achievement. Third argument, taxing him would hurt innovation and entrepreneurship. This assumes wealth and innovation are directly correlated. But the most innovative period in American history was the 1950s and 1960s, when top marginal tax rates were 91%. Bell Labs invented the transistor. NASA went to the moon. Medical breakthroughs, all during high tax periods. Innovation comes from investment in research, education, and infrastructure, not from individuals accumulating $750 billion in personal wealth. The real question is, what's better for society? One person with $748 billion? Or that wealth distributed in ways that increase productive investment, research funding, infrastructure development, and broad-based consumption that drives economic growth? History suggests the latter. Every advanced economy that's thrived long-term has had mechanisms to prevent extreme wealth concentration, progressive taxation, strong labor unions, antitrust enforcement, public investment. The United States had these mechanisms from the 1940s to 1970s. Wealth concentration was lower, middle class was larger, economic growth was higher, median wages grew with productivity. Since 1980, those mechanisms were dismantled, taxes cut, unions weakened, antitrust abandoned, financialization accelerated, and wealth concentration went parabolic. Musk's $748 billion is the endpoint of this trajectory. It's the logical conclusion of 40 years of policy choices that prioritized asset price inflation over productive growth, and it can't continue. Not because of ideology, because of math. Systems with extreme inequality become unstable. They experience political upheaval, economic crisis, or both. We're seeing the political upheaval now. Populism rising globally, trust in institutions collapsing, social cohesion fraying. These aren't random events. They're predictable responses to a system that delivers $748 billion to one person while millions struggle to afford housing. The economic crisis comes next. When asset bubbles pop, when monetary policy can't sustain valuations anymore, when Tesla stock goes from 1.4 trillion to 300 billion, when Musk's wealth goes from 748 billion to 150 billion, and that wealth doesn't just vanish into the ether. It gets wiped out in market crashes that destroy retirement accounts, pension funds, and middle-class savings. The people who suffer most from billionaire wealth concentration aren't the billionaires. They have diversified assets, offshore accounts, and resources to weather any crisis. It's everyone else, the people whose 401ks are invested in the same overvalued stocks, the people whose pensions depend on market returns that can't be sustained. So when Musk loses 500 billion in a crash, he's still worth 250 billion. Uncomfortable but survivable. When a middle-class retiree loses 40% of their savings in the same crash, that's catastrophic. This is why extreme wealth concentration is systemically dangerous. It creates fragility that hurts everyone when it breaks. Now, let's talk about what 748 billion in personal wealth means practically, because it's hard to conceptualize that number. If you earned $100,000 per year and saved every penny, no taxes, no expenses, it would take you 7.4 million years to accumulate $748 billion. That's longer than human civilization has existed. If you spent $1 million per day, every single day, it would take you 2,048 years to spend 748 billion. You'd have to start spending in the year before Jesus was born and continue until today. The compound interest on 748 billion, even at a conservative 3% return, is 22.4 billion per year. That's 61 million per day, 2.5 million per hour, $42,000 per minute. Musk makes more in 1 minute from investment returns than most Americans make in a year, and that's passive income. He doesn't have to do anything. The wealth generates itself. This is the magic of compounding at scale. Small amounts compound slowly. Massive amounts compound exponentially. Once you reach a certain threshold, wealth accumulation becomes automatic and unstoppable. And there's no economic or moral justification for this. It's purely a function of the mathematical properties of compound growth combined with systems that allow unlimited accumulation. Historically, societies prevented this through various mechanisms: inheritance taxes, wealth taxes, maximum wage laws, mandatory profit sharing, Jubilee years forgiving debts. Different cultures, different methods, same goal: prevent extreme concentration that destabilizes the system. Modern capitalism abandoned these mechanisms in favor of unlimited accumulation. The argument was that this would drive innovation and growth, and for a while it did. But we've reached the point of diminishing returns. The 748th billion doesn't drive innovation anymore. It drives asset bubbles and political corruption. The productive contribution happens at the first billion, maybe the first 10 billion. After that, it's just scorekeeping and power accumulation. Musk could have $10 billion and still run Tesla, SpaceX, and Starlink. He could still innovate. He could still take risks. The additional 738 billion adds nothing to his productive capacity. It just gives him political and economic power that no individual should have. So, what happens next? Where does this go? 3 scenarios. First, the bubble continues. Tesla maintains absurd valuation. Musk gets even wealthier. Maybe he hits 1 trillion. The system keeps inflating until it can't anymore. And then catastrophic collapse. Second, gradual deflation. Tesla stock slowly declines as reality sets in. Competition increases. FSD doesn't materialize. Valuation normalizes to 300 billion over 5 years. Musk's wealth declines to 200 billion. Still obscene but less systemically dangerous. Market adjusts without crisis. Third, policy intervention. Wealth taxes. Antitrust breakup of Tesla, SpaceX, Twitter. Forced liquidation of shares above certain thresholds. Democratic societies decide extreme wealth concentration is incompatible with democracy and capitalism, and they impose limits. The first scenario leads to crisis. The second is unlikely because bubbles rarely deflate slowly, they pop. The third requires political will that doesn't currently exist. Most likely, we get scenario 1. The bubble inflates until something breaks. Interest rates spike, recession hits, liquidity dries up, and Tesla stock collapses from 100 times revenue to 10 times revenue. Musk loses $600 billion, the largest wealth destruction in history. Again, but this time it's accompanied by broader systemic crisis. Because Tesla isn't the only overvalued asset, the entire market is propped up by the same monetary dynamics. When Tesla goes, it takes the Magnificent Seven with it. Tech sector crashes, NASDAQ down 60%, retirement accounts devastated. And Musk? He survives, still worth $150 billion, still controls SpaceX, still controls Starlink, still politically powerful. The system protects the oligarchs. It's everyone else who pays. This is why $748 billion in one person's wealth isn't a success story. It's a warning signal, an indicator that the system is in terminal dysfunction, that monetary policy has inflated assets to levels that can't be sustained, that inequality has reached levels that history shows precede collapse. The question isn't whether to celebrate Musk's achievement. The question is whether society should allow wealth accumulation at this scale, whether democratic capitalism can survive when individuals have resources that rival nations, whether the instability created by extreme inequality is worth the innovation and entrepreneurship that creates it. History answers clearly, no. Extreme inequality kills the system that created it, not immediately, but inevitably. If this breakdown of how one person accumulated $748 billion, why that number represents monetary policy failure more than business success, what Tesla's valuation actually is versus what it should be, and why extreme wealth concentration always precedes systemic crisis, changed how you see billionaire wealth, hit that like button and subscribe. We're tracking every move in wealth concentration, every asset bubble inflation, every sign that the system is approaching breaking point. Leave a comment. Is $748 billion too much for one person? Does inequality at this level threaten democracy and capitalism? And when the bubble pops, who loses? Share this with anyone who thinks Musk's wealth is purely from innovation and hard work. After this, they'll understand it's primarily from monetary policy and asset price inflation, and why that matters for everyone's financial future.